right. Today we're going to talk about this trade that I did on Ally. Uh, I sold a put on Ally, one contract at 35 cents per contract. So basically, what that is one contract represents 100 shares. So multiply 100 times 35 cents, you get $35. So when I sold this put, I got credited to my brokerage account $35 on March 28th. And per the agreement of this contract, if Ally stock stays above $22 a share by this date, uh, I get to keep the full $35. Now, if Ally stock trades below $22 a share by this date, then I'm forced to buy 100 shares of Ally at $22 a share. And but if I do get what's called assign the shares, and I have to buy them, I get to keep the credit. So I get to keep the $35, and I still buy the 100 shares at 22. Even if the stock closes at 21, per agreement of this contract, I have to buy it at 22 on this date. So now that's explained. Currently, I'm at a profit of about 97% of this contract, which is about $34. There's only about $1 left to be made on this. At the time of this recording, there's only about 3 more days till expiration. So, as long as the stock stays above 22 by that date, I'm keeping that 35. Um, and I don't have to buy the shares. So currently the stock is trading at $25. So it could excuse me, stock could get hit, and I get forced to buy, but that is what it is. Excuse me. If let's take a look. Hold on. Uh, so the reason why I put this trade on is looking at Ally stock. It recently got hit during this whole Silicon Valley Bank uh, chaos that unfolded, and the stock traded down to about $22. You see, it did trade down to $22 at about December of last year. Bounced off of that. Now it traded back down here, bounced off. Could break down lower. It could continue running higher. We'll see. Last time it traded at $22 a share was back in 2020. Um, so it's been a while since we've been down at these levels, and this was 2020. At the beginning of 2020, it was about $30 a share. Fell all the way down to $10 a share. I remember I bought this my first time buying this stock. I bought it right about 15, rolled it up to about 30, 40, sold it, made good profit on not only the shares but the dividend as well. So uh, it was a good stock. I love Ally Bank. It's been great. I've been using that bank for years now. So don't see any risk of this going out of business, or some Silicon Valley Bank situation going on or whatever like that with this. But yeah, then the only other thing is that take a look on Yahoo Finance. They currently have it pegged as undervalued, so that's great. It's you can also confirm that PE ratio of 5. The S&P on average will trade around about a 13 to 15 PE ratio. So this isn't a one stop, shop as far as like knowing if something's overvalued or undervalued. But typically, if a stock is trading below about 13, 15 or whatever like that, you could consider it undervalued. Um, Pays about 4.7% dividend, almost 5% dividend. Now, with the rising interest rates, Ally Bank actually pays close to 4% just from you having cash in the bank. So it's not really worth looking at it from a dividend perspective or whatever, because I could just keep the cash in the bank, whatever. But if you do buy shares at these prices, eventually um, you know, these interest rates aren't going to stay as high as they are now. Eventually they're going to come back down. And when interest rates do come back down, these banks won't be paying as high of an interest on their high interest savings accounts. So, yeah, and there's a lot of market sentiment saying that they might start cutting interest rates towards the back half of this year, 2023. So, if you bought the shares here, though, you get to lock in that dividend yield, and also you could get some good share appreciation as well. So, you know, uh, that's about it, though. I'm planning on posting reviews of trades and also posting on the day I place trades. And I want to do this as an accountability factor, not only for myself, but if others want to follow along, you can do so as well. So there you have it. That's it. Peace.